Welcome back. Moody's Investors Service on Monday upgraded its outlook of FGB to positive from stable after the lender and National Bank of Abu Dhabi said they plan to merge, creating the biggest bank by assets in the Middle East. The rating agency also affirmed the deposit ratings of both NBAD and FGB at AA3 and A2 respectively. But it said that it was keeping NBAD's long-term ratings outlook negative in line with a negative outlook assigned to the government of Abu Dhabi amid the biggest crash in oil prices since the financial crisis of 2008. Moody's added that it kept NBAD's rating unchanged even as the Arabian Gulf suffers from an economic slowdown, because the merger will boost the bank's profitability and add more diversification when FGB's bigger retail book is combined with that of NBAD's. Earlier, NBAD and FGB said that their boards unanimously voted to recommend to their shareholders a merger. The banks are proposing that the deal be done through a share swap in which FGB shareholders will receive 1.254 NBAD shares for each FGB share. The first phase of a Russian-Egyptian UAE investment fund will be seeded with $500 million following an agreement between the parties. According to reports, the initial financing will be used to start construction of a 2 million square meter Russian industrial zone at Egypt's Port Said. The UAE and Egyptian governments signed a deal in February with the Russian Direct Investment Fund, a fund set up by the Russian government with an initial $10 billion in 2011 to make equity investments in high-growth sectors of the Russian economy. The RDIF has secured more than $25 billion through long-term partnerships with global investors, 90% of whom are from Asia and the Middle East, including UAE port operator DP World. Under the February agreement, the three countries agreed to launch a fund with the participation of Abu Dhabi Investment Fund and two Egyptian banks, the National Bank of Egypt and Banque Misr. The fund was intended to finance large-scale infrastructure projects in Egypt, such as logistics centers in the Suez Canal, development zone, subways, and railway lines. Housing rents for existing tenants on Abu Dhabi's Reem Island could fall by as much as 10% by the end of the year, according to estate agents in the capital. According to a property firm, JLL, there are 245,000 residential units in the newer areas of Abu Dhabi, with 4,000 more expected to enter the market this year. Many of those homes will be on Reem Island, where the property broker predicts rents could dip by 10% after having rocketed up by 33% between 2013 and last year. The head of JLL's Abu Dhabi office was quoted as saying that it expects vacancy rates to increase further in the second half of the year due to job cuts and people looking to either leave or downsize as their tenancies come up for renewal. They added that this is expected to lead to a further discount in rents at a time lag to vacancy increasing. According to property broker Astico, rents for flats across Abu Dhabi fell by 2% during the first 3 months of the year compared with the previous quarter, with the biggest drop concentrated on Reem Island. And Emaar Properties has reportedly awarded a 500 billion dirhams contract to build the Opera Grand Tower in downtown Dubai to Athens-based Consolidated Contractors Company, according to Mead. The business research firm believes that the tower would be 65 to 70 stories high and that 56 of these would be residential floors. The tower will form part of the new Opera District, which will overlook the Dubai Opera House that is set to open its doors at the end of next month. The master plan of the district had been centered on creating an alternative to what's currently in the downtown area based on cultural attractions with the potential for new performing arts schools, galleries, and jazz clubs to be added to the 2,000 capacity opera house, as well as the new towers proposed for the area.